I consider it more of a filter, and maybe it's just semantics, but I think words define the communication in our head. Confirmation is very different than a filter, and I rather look at this as a filter. There's two filters I could use here. One is, of course, let's say I'm going ahead and looking at this trade for a potential breakout or breakdown. Okay, this is my downtrend line. Just some quick and dirty lines here. Okay, so I've got possibly a triangle pattern here. If I've got a sideways market cycle, and for those who had joined me throughout the month, you know that when the market cycle is sideways, we utilize a momentum strategy. Okay, and that simply means that I'm waiting for the direction to reveal itself. Let me go ahead and change the properties here of this MACD so we can actually see it. I'm going to go ahead and change that blue to a white. Okay, there we go. So again, if you're with me during the month, you know how momentum trades work. Sideways market cycle, look for some sort of congestion or consolidation pattern like a triangle or a rectangle or a pennant. We know the definition of what a breakout or breakdown would be, because a breakout would be if prices rally through resistance. We know that a breakdown would be if prices sell off through support. Okay. Now what I'll do as a filter, here's two filters. If you're a multiple time frame trader, you could look at the longer time frames and say, okay, the overall trend is down, I'll trade it only in the down direction. That's fine. What I'd much rather do personally is I realize that a short-term time frame like a 15 or a 30 could rally for 40, 50 pips easily. You know, I could get a move from, say, 121.30 up to about 121.65 where we had topped out before. It's about 35 pips, right? I could easily make that move. Prices have been there before, and if you remember the discussion about PowerStats, depending upon what time of day it is, the euro-yen could move about 30 pips. Now, should I confirm that? We certainly could. We certainly could confirm that. Okay, I could go over to the euro-yen. I don't know what time it is, but let's imagine different times. As far as expectations for follow-through, what's my normal pip range? Remember I said I'm okay with a 30 pip upside? Well, I've been looking at this chart long enough to know that my average for the euro-yen throughout the day is somewhere between 30 and 40 pips. We dip into the 20s sometimes, but if I was averaging out for the most part, regardless of the time of day it is, I'm pretty assured anywhere between 30 and 40 pips, which is why I said that from before. I just wanted you guys to know that I just didn't pick that number off the top of my head. It has justification within the average price movement of this pair throughout the 24-hour day. Now, are there nuances? If this was closer to the Asian session, should I be trading that with that kind of expectation through the doldrums of the market, afternoon and before Sydney opens? Probably not. Okay? But for the most part, you know, if I'm trading with between 2 a.m. and about noon Eastern Standard Time, I'm pretty much in the right ballpark if I'm expecting that as a reasonable profit target. That does not mean prices will go there, okay? It just means that there's more of a realistic chance that it could. Okay? Everyone with me there? This is how you use that information. Everyone with me? Okay? So what we're doing here, again, is I don't believe it's multiple time frame confirmation. If I believe the market could break out higher, and I think that's a reasonable trade, and my MACD confirms it, here's how it would work. By the way, that 35 pips could be to the downside too, very easily. You know, that 35 pips could take me to the downside too. Okay, and I'm way above 30 pips here. Sorry about that. I meant to talk about this level right here. But this is also another resistance level. Sorry. Okay, so let's tighten this up because I was looking more like at 135 pips. Okay, so if we break out around this area, around the 121 area, could I reach 60? Could I reach 70 and be within that pip expectation? Sure. It's not a huge move. I'm not saying that it is, but it's reasonable to expect it if I'm willing to take that trade. If I'm not willing to take that trade, then I could go with the overall direction. By the way, here's how you confirm a momentum trade. So I know where my support and resistance is. I've confirmed that I'm in a sideways or accumulation cycle with the angle of the wave. I should be, we should start off with that look back view, which we did, and then feel free to expand out of it, right, once you've confirmed it. So if we break down, my MACD has to be plotting below the 0 line. Okay, does everyone see that? Right now it's just barely negative, but it is negative, so it would confirm a break lower. I cannot stress that enough. The indicator being negative does not mean we short. There's nothing to confirm really yet until price makes its move. If price heads higher and my MACD is higher, fine, I'll try to take that breakout to the upside. If I'd rather go with the overall trend as a filter, sure. I don't think longer-term time frames really confirm anything of a short-term time frame. I think the semantics is wrong. If you want to use it as a filter, absolutely, feel free. The MACD is a filter. This histogram down here that I use with momentum trades is a filter. So as far as multiple time frames and whether you should use a longer time frame to confirm the direction of another, you know, it's a personal choice. My fear, though, as I mentioned, is that once you start consulting other time frames, it's very easy to open Pandora's box, and when things are going wrong, look for rationalizations as to why you should continue holding that position. That's my warning to you all, okay? Are there a number of tools that might point to more downside targets? Sure. I mean, I'm sure there's a number of tools. I like the MACD because, as we had discussed earlier in the month, the MACD is a short-term momentum indicator. It's fantastic for confirming breakouts in this kind of consolidation market. And just as we talked about earlier in the month, different types of market cycles being appropriate for different types of strategies, it goes for indicators as well. Certain indicators are great in a chop. Certain indicators are lousy in a chop. Chop meaning a range-bound market. So there's a number of tools you could use. This is by no means a complete list of what I think you should or should not use. This is just what I like to use. I like that MACD Traditional. It's very easy to read. All I'm looking for is whether the histogram bars are above or below 0 after I see the price confirmation of the breakout or breakdown. Okay, so that is my kind of warning about it. My multiple time frame confirmation is more like a warning than it is a to do or not to do, but I would rather you use the mentality of a filter. You know, you still want to have the shorter term time frame trigger a valid trade. Okay, you still need to have this trade trigger a valid breakout, breakdown, correction, reversal, whatever it is. Now, if you choose to only trade in the direction of the larger time frame, you know, my opinion really is the only time frames trend that I think is the most psychologically relevant, by the way, is the daily. Okay? Now, obviously, the longer term time frames certainly will have a longer term psychology reflection than a shorter term, but like I said, I think it just opens up so much negativity for the little bit of positivity that you might get out of using a filter. I just assume use an indicator on this chart as an overall filter. And by the way, do I need the longer term time frame to tell me that the overall direction, going back into market memory here, do I need that 240 or that 60-minute chart? Well, the 60 was sideways too. So do I need that 240 or that daily to tell me that the overall direction within this market memory is down? Here's a 10-day look back on the 30-minute chart. Do I need that? Do I really need that? If you use the market memory, you use the look back settings, you should absolutely be able to see the overall psychology of this time frame. And it has been steadily heading down. Even though I'm in consolidation or congestion right now, the overall direction absolutely has been a series of lower highs. So I don't necessarily need the 240 to confirm that. I can see that right from the market memory here. Yet another reason why the market memory assessment is so important. If I want to use a filter, I can assess that right from this time frame and not jump other time frames and not open Pandora's box. And once you start jumping time frames around, I'm telling you, it's awful hard to stop. Okay, it's awful hard to take a look at just this 30-minute chart and say, I am trading a 30-minute psychology. There's a 30-minute risk reward. There's 30-minute support and resistance based upon the touch points that won't be available on the 60 or the 240. It's its own world. In fact, I treat time frames so individually, they might as well be their own symbol. They might as well be their very own chart of a pair. Even though I might be looking at multiple time frames across the euro-yen, it's so unique in terms of psychology and support and resistance that I really want to treat it as a universe unto itself. Okay, so that's my 2 cents on multiple time frame confirmation. I'd much rather you use a filter. And I'd much rather you just use the time frame itself and filter it with the overall direction, which is not hard to see once you pull in that market psychology. Everybody with me there? Everybody understand where I'm coming from? Or at least, whether you agree with me or not, doesn't matter. I don't think this is a point at which it's going to make or break your trading career. It's really a matter of sidestepping little landmines. So that's just my opinion about that.